This video is for the owners of businesses who've been struggling through lockdown. We're almost out the other end with the vaccination drive going full pelt, and looking forward to at least for those of us in the UK, the Prime Minister telling us what's next on Monday. You've probably been wondering now, right, if we're opening up, is my business worth investing in for the future? Just keeping going on the back burner or having it as a cash cow? Or should you get rid of it? So what I've done here is taken a strategic framework used by me for probably the last 20, 30 years to decide whether certain businesses, so operating companies or targets or companies in your portfolio, whether you should look to invest in with them or get rid of them, or ideally for the highest bidder. So it's based on Michael Porter's 5 Forces framework. If any of you those done an MBA, probably familiar with that, and a lot more people besides. Anyway, I shall crack on with using the tool. And probably about 10-15 minutes, you'll have a very insightful view as to what you should do with the company. So these actual figures and positions taken from a multi-billion turnover British company that's in the top 10 in its sector. So it's a real business of clients I've been talking with. But I haven't put their name and not giving out any numbers that might reveal who it is. So you need to start off with the first piece of data is to put on the return on capital estimate. I put estimate going forward. So you may have the last financial figures or the current figures derived from the management accounts, but we've all been in lockdown. So you're going to have to use your critical judgment of what figure that you think the percentage return on capital will be going forward. So probably repeat myself there, but anyway, for this company I reckon it will be 12%, which is basically its financials before the lockdown. Then we're looking at the trend in return on capital in that industry, and basic, unusual, bit boring, but it's stable. So you've got a choice here. I've got in the drop down list, it could be on the way up, could be stable, erratic with no 10, falling, or you're not very sure. Barriers to entry. So this is an industry that has high capital costs to get in. So good things is it keeps new entrants and competitors and foreign companies out. So in their case, very high barriers to entry. So there are the other choices on the drop down. Then estimate of the 5-year future revenue growth. Well, I think for this industry, it's going to be negative. So sadly, in the choice, you've got over 10%, 5 to 10, 0 to 5, D, negative, or again, you're not sure or unknown. The balance of customer demand and industry demand. Well, in this industry, we've got serious oversupply, and lots of people thinking that their competitors will exit, but nobody seems over keen to do that. So there's serious oversupply, but no plans from looking at the top 10 competitors for competitors to exit the industry. Bit of a bummer for pricing and returns. Threats from substitutes. Well, I put only minor threats expected. I don't see anything coming in to bump out these firms in the next 10 years. There you are. Haven't got a crystal ball, but that's my judgment. Again, choose between threats appear to not to exist or unlikely, through to minor things, through to serious threats of replacement. So be interesting to do that for the internal combustion engine automotive companies, because EVs are just over the horizon. So in that case, you might want to give it a score a C or a D. But anyway, on we go. Relative bargaining power between suppliers and your own companies. So in this case, the industry is more concentrated than its supply base. So you've got the ability to dictate terms. And the balance between customers and suppliers, I reckon that's about even. So what I've done with each of these answers to each of these questions is score the various options to the long-term position of companies in that sector. So adding up the scores on the doors here, we end up with 28. And then we have a bit of a table here as to the different bands as to the judgment on the company. And in this case, the 28 comes out as it's an unattractive industry. You should really consider selling unless you're the segment leader or number 1 or 2. You might be okay in the medium term in the next 5 years. So that's how to use the tool. It's currently in Excel. I've been playing around with embedding Excel into the cloud and onto a website with mixed success. So simplest thing is if you direct message me, I might even put a button on the website to send you the spreadsheet, or send me a direct message if you want to go through it. We should be able to wrap it up in 15 to 30 minutes for your own specific business. So that might be something you'd wish to do together. You can always get out various strategy books and do it for yourself, but might be quicker to use this off-the-shelf tool. If you've decided that you're in an attractive or unusually attractive industry and you want some help bouncing back as fast as possible and making as much as possible in the next 12, 18 months, do get in touch. I'm going to put up this spreadsheet on, what am I going to call it? I'm going to put it on profitwithjohn.com/keep or kill. Keep or kill all lowercase. If I've done the rinky dink to put all this validation and scoring into the web version of the spreadsheet, you'll be able to use it there. If I'm not that smart, which is probably the case, I'll put a button on for you to send me a request, and we'll go old school with the Excel spreadsheet. So took a little longer, but it's probably quicker to go through the actual tool than it is to explain it. Hope you find it useful in deciding whether you're going to keep and invest in your business after the lockdown's over, or whether it's time for you to put it on the market and see what you can get from the highest bidder. In either case, if you'd like some help, contact me with profitwithjohn.com. Thanks for watching.